Good afternoon, everybody. It is June 11th. This is Bob Iacchino along with Mike Arnold, and this is a weekend Path Chat update covering the Forex markets for the week beginning, as I said, June 11th. Quick review of last week. We really had four major things that happened along with some minor things. The UK had their election, and it kind of muddled the Brexit process a little bit with Theresa May not quite receiving the support that she had hoped for when she called for the snap election on April 18th. Her party actually lost seats in Parliament, although she did increase the percentage of votes that the Conservative Party got for Prime Minister, but is still not going to make the Brexit process any easier or the hard Brexit any more popular. The European Central Bank, after their unchanged rate decision and unchanged quantitative easing announcement, in the statement that followed, they dropped the possibility of lower rates. Former FBI Director James Comey testified before the Senate Intelligence Committee on his conversations with President Donald Trump and the memos that he supposedly has. And data from the Eurozone showed that they're maintaining their faster growth than the U.S. Let's start with that. Purchasing Managers indices released this week show that the Eurozone continues to outperform the other developed countries. The Eurozone Composite PMI, which is both manufacturing and services, stood at 56.8. That's unchanged from April. Meanwhile, the United States Composite clocked in at 53.6 and the UK at 56.7, just below April's 56.8 three-year high for the UK. Japan's Composite PMI registered 52.6 and China's 51.5. Mentioned that James Comey testified. In our humble opinion, he came across as honest. However, there were political undertones on both sides of it. He did kind of take swipes at both parties, but it did seem like he was a bit disgruntled. Both sides of this particular argument are claiming vindication and victory and evidence and everything else that goes with the partisan system that we live in. Markets didn't react at all except to rally in toward the end of the testimony. The stock market rallied up. We had a fairly large drop in the FANG stocks at the end of the week. That was pretty surprising and impressive. Part of it on a Goldman Sachs note that they may be overvalued. That note came out around 10 and the stock started to fall on Friday. Back to that UK election news, as I mentioned, the Conservative Party actually lost their majority. They're sometimes known as the Tories also. And Labour Party gained the most seats. So now Theresa May has to form a coalition in order to get any of the things she wants to do done with sort of a pen swipe. She's going to have to form a coalition government with one of the smaller parties because Labour is so diametrically opposed to her that they're not going to help her with anything, similar to the situation we have here in the U.S. Again, the ECB dropped their rate cut reference in the statement and in the Q&A after the unchanged rate decision. ECB President Mario Draghi said that the bank is dropping its bias toward cutting interest rates, but it retained its bias toward increasing quantitative easing if necessary. So kind of a two-handed slap. On the one hand, they removed the possibility of lower rates in the short term, but they did say that they could increase asset purchases. He said inflation was not quite strong enough yet, and they had to be patient on pulling away the easy money policies that they've been in for quite a while now. That is really about it. We don't have to go over too much of the data from last week because it really was about the UK election and about the James Comey testimony to see if there was going to be any volatility moves. If you want to see what volatility did, because it did actually briefly move, but on the move of the FANG stocks, not on the move of the other two things I just mentioned, you can check out our Futures Path Chat, which is up on the YouTube channel where Mike talks about what happened with the VIX and why. Let's go into the economic calendar for this coming week. Let's start out with today, Sunday, June 11th. We are waiting right now as we speak on Japanese machine orders year over year for April. The forecast is up 7.3%. The previous was down 0.7%. So that's probably going to move the yen very substantially if we don't get somewhere close to a match on the forecast of 7.3. Moving on to Monday, June 12th, nothing of any real significance. U.S. monthly budget statement and Australia's NAB Business Confidence Index, which I have no estimate for. Moving on to Tuesday the 13th, a little bit more data heavy of a day starting at 3:30 in the morning Central Time. UK Consumer Price Index month over month and year over year, and then their core consumer price year over year. Core consumer year over year, expected 2.3 versus 2.4 last. Headline consumer price year over year, expected 2.7 versus 2.7 last. And then the month over month expected at 0.2 versus 0.5 last. All of those are May numbers. 4 a.m. Chicago time. German ZEW survey of economic sentiment for June, expected at 21.8, last at 20.6. You'll also get a current situation estimate for June, expected at 85. It was 83.9 last. You get to about 7:30 p.m. Central Time. In Australia, you've got the Westpac Consumer Confidence Index, no estimate on that. And then you get to about 9 o'clock p.m. Central Time, and you've got Chinese retail sales year over year for May, expected at 10.7%. That would be unchanged from last. 30 minutes before midnight, you've got Japanese industrial production. And then also you've got Chinese industrial production year over year and year to date. Year over year expected to be 6.4 versus 6.5 last, and year to date expected to be 6.6 versus 6.7 last. Then you've also got Japanese industrial production year over year. No estimate on that. Moving on to Wednesday, June 14th. Tons of data on Wednesday starting at 1 a.m. German Consumer Price Index year over year, the May final, expected to be up 1.5%. Get to 3:30 in the morning. We've got UK average weekly earnings, unemployment rate, and unemployment change. Average weekly earnings expected to be up 2.4. That would be unchanged. Unemployment rate is expected to be 4.6. That would also be unchanged, 4.6%. And the employment change is expected to be up 125,000 jobs. It was 122 last. 4 a.m. Eurozone industrial production year over year expected to be up 1.4% versus 1.9% last. Then we've got month over month, year over year, and ex-food and energy consumer price index in the U.S., 7:30 Central Time. Consumer prices year over year expected to be at 2%. It's 2.2% last. The ex-food and energy year over year expected to be up 1.9% versus 1.9% last. And the month over month expected to be 0 versus 0.2 last. We've also got advanced retail sales for May and less autos retail sales for May. The advanced retail sales headline expected to be up 0.1. Retail sales less autos expected to be up 0.2% versus 0.3 last. Business inventories will come out at 9. That's expected to be down 0.1%. And then as usual, we've got the EIA crude oil inventories. No estimate on that as of right now. Then we've got Federal Open Market Committee rate decision meeting. As of Friday, the CME Group's Fed Watch tool had that at 99.6% that they were going to raise rates 25 basis points. So a little anticlimactic, but the estimate of the Federal Open Market Committee rate decision is that the upper bound of the rate range is going to be 1.25% versus 1% last, and the lower bound is going to be 1% versus 0.75 last. So that's pretty much as expected. We get into the evening, 8:30 Central Time, Australia's employment change and unemployment rate. The headline number is supposed to be up 10,000 jobs, and the unemployment rate is supposed to be unchanged at 5.7%. Moving on to Thursday, June 15th. Again, a bit of a heavy day. 2:30 Central Time. We've got the Swiss sight deposit interest rates. Okay, that's the rate decision from the Swiss National Bank. All of that expected to be unchanged, all three rates. Okay, deposit interest rates, LIBOR lower target and LIBOR upper target, all expected to be unchanged. Those rates are still negative. That's right, negative rates in Switzerland still persist. Get to 3:30 in the morning Central Time. UK retail sales year over year expected to be up 1.9% versus 4.5% last. Then you've got the Bank of England rate decision. That's at 6 a.m. Central Time. And their asset purchase target, nothing is supposed to change on that. Corporate bond target still supposed to be 10 billion pounds. Asset purchase target is supposed to remain at 435 billion. And the Bank of England rate is supposed to stay at 25 basis points. 7:30, Initial jobless claims in the U.S. expected at 245,000, and continuing claims, no estimate on that one. Then at 8 a.m., Canada's existing home sales month over month, also no estimate. 8:15 Central Time, supposed to have U.S. industrial production and the manufacturing production. Industrial production is supposed to be up 0.2% versus 1% last, and the manufacturing figure is expected to be up 0.1% versus 1% last. We've also got the NAHB Housing Market Index for June, expected to be unchanged at 70. 3 in the afternoon Central Time, Bank of England Governor Mark Carney speaks at Mansion House in London. That is going to be it for Thursday. Friday, June 16th, piling it on us again. We have the Bank of Japan 10-year yield target and policy base rate. So again, another central bank decision. Nothing is supposed to be changed on that. Coming into 1:30, we've got Bank of Japan President Kuroda, who's then speaking at his press conference, which is typical after a rate decision meeting. Then at 4 a.m., Eurozone Consumer Price Index, May final, year over year, month over month, and core. Year over year expected to be up 1.4% versus 1.9%. Month over month expected to be down 0.1% versus up 0.4% last. And the core consumer price year over year for May final expected to be up 0.9 versus up 0.9 last. 7:30 Central, U.S. housing starts. No estimate on housing starts for May, but month over month is supposed to be up 4.1% versus down 2.6% last. And building permits also coming out month over month for May, expected to be up 1.8% versus down 2.5% last. Then at 9 a.m. Central, University of Michigan consumer confidence number for June, the preliminary, expected to be 97.1 versus 97.1 last. And then at noon, Baker Hughes rig counts. That is it for the review of last week and the preview of next week. Let me turn it over to Mike now to let you know what he's seeing on the FX charts. Mike, it's all yours.
Very much, Bob. Euro, US dollar. Thursday, we got to close below the trend line into a clear path move. It's against the rotation zone, so this is a lower probability one. If we do get back below the 21 here, watch for a full target of 111.37, but it would have to get back below the 21. This could be traded intraday with these price targets. So, if we head lower, Euro, US dollar, first key area support about 111.73 to 80. Then if we get below that, we're watching for that a 111.37 area, and slightly below that, then we'd be watching for right around the 111.20 area rising trend line. Rally back up. We're gonna have some minor resistance right around the 112.15 to 20 area. Then we'll be looking for the 112.30 to 36 key area, hooking over 8. 12.5% GAN level and significant level all in there. If we do get through that, we can watch for a rally up to about the 112.50 area. Pound US dollar. So just to put this into perspective, we've had a nice drop over a couple days. We did find some key support. It did drop below these key levels you see here. The horizontal line that comes in about 127.25. The next major one lower, which comes in 126.33, which we found support at and bounced back above those levels. Just want to zoom out for you. So, if we do sell off again and get below this 127.26 level, which will be first support, watch for 127.06 to 127. Then 126.95, and then if that's broken, we could pretty much go down to this 126.35 area right down around there. On a rally back up, minor resistance is going to come in at the old defining point, 127.69. Then we're going to be looking for a 127.92. Then we'll be looking for 128.13 on the upside. Switching over to the US dollar, Japanese yen. New redrawn trend line, lower trend line. Nice little 3-day rally back into the rotation zone. Actually went up to the upper end of the rotation zone. Test the area of the 21 and the declining trend line. Didn't quite get there before dropping back down. pretty much just closing above the 8. So continued rally back up. We're going to be watching for first level resistance around 110.47. Then next level at 110.81. That can be targets for any short-term long trades to the 110.85. If that is broken, 110.92. We have a lot of resistance in this area. Then we'll be looking for the 111 and then the 111.08 area to the upside. If it pulls back, we have some minor support right in this 110.20 to 24 area. Then we'll be looking back down to the 109.80 area, 77 to 80, and then the 109.38 level. If all that's broken, about 109.20 is next key levels down. US dollar Swiss, also nice 3-day rally back in the rotation zone, came up, hit the declining 21 and significant level area, coming in about 97.29. Rally back up, minor resistance going to come in at the significant level and prior high area 96.94. Then we'll be watching for a retest of this 97.27 to 29 area. If that is broken, next key area higher 96.81 on the upside. If we pull back, we have a hooking up 8 and a 12.5 GAN level coming in at 96.74, so that'll be our first key level of support. Then we'll be looking for the 96.56 area. Then probably down to the 96.22 to 20 area, and then a retest of the most recent swing lows, 96.16. Aussie US dollar, slight 2-day pause, pulling back to this prior key high and the flattening 200 coming in around 75.22, 20 to 22 area. If we do see a further pullback, which we're still inside this bar, so we've had 2 inside days inside this big rally up, which gave us our new defining point on the trend line. If we do get below Friday's lows, 75.19, we'll be watching for a return to about the 75 level, which is a prior breakout zone and the rising 8. Then we have some more support coming in at 74.93 to 74.86. If all that is broken, we could see a return to about 74.81. On a rally back up, we will be watching for first resistance coming at 75.47 right in here, just above Friday's highs. Then we could see a rally to about the 75.60 area. Then we'll watch for a retest of the new defining point, 75.66. And if we do get through that, it's 75.68. So that 66 to 68 level is going to be key. US dollar, Canadian dollar really caught for the last couple weeks in between this range. There's a couple key levels that we are watching for the market to get either a sustained intraday move, and when we say that, a lot of times we mean a move below the level, then a retest of that level, and then a continued move in the first direction. So for example, if we say we're watching for a sustained move intraday below the 134.27 level, I'd like to see it come down, break through that, retest that 124.27, and then continue again lower. Or we're watching for a close below that level. So that, reiterate that level, the 134.27 is key to the downside, and then to the upside about the 135.41. If we do get the move to the downside, there's going to be the first level support coming in about this 134.37 to 134.27, then some other support coming in around 134.09. If all that's broken, we're going to be watching for a drop down to the 200 area at 133.62 to 133.69 area. Rally back up. We do have resistance, 135.08. You see right here, GAN level, flat 50, flat 21. If we get through that, watching for, there'll be some minor resistance right around Friday's highs, 135.28, but then major resistance, 135.40. If we get beyond that, then we'll be looking for a retest of the 135.79 to 87 key area here. Finally, over to the US dollar Mexican peso. Continued to push lower on Friday, getting below the most recent key lows that were gauging our GAN levels off of. If it continues lower Sunday and Monday, first major levels which we're targeting 1807.58 and then down to the 1799.83 area. If it does rally up, 1824.50 area right in here, first level of resistance. Then we'll be looking for the 1830.44 to 1832.74 area. Then we have the declining 8. We still don't have a redraw of this trend line, so if we do rally all the way back up to kiss it goodbye, we're looking right at this point to about the 1836.64 area. That's all we have for you. Turning it back over to you, Bob.
Thank you for that, Michael, and thanks to you guys for watching and listening. There is a new Money Path podcast out. You can find it in Google Play or the Apple iTunes Store. No charge, of course. Or you can just download it from our website and listen to it there, pathtradingpartners.com. Hit like and subscribe if you like what we're doing. We will talk to you guys in the next Path Chat. Cheers, everyone.